We're now delighted to look at the top end of the market, looking at demand for VVIP aircraft. I'm going to hand over now to Jeff Dunn and Andrew Gough. Brilliant.
Thanks, Alistair. All right, thank you. Hey, it's great to be here. One of the things we're going to do here is about the demand for the VVIP airplane. We're going to take you on a little detour here and talk about the part of the market that we really don't talk a lot about here. And that's where we talk about the VVIP, where Boeing business jets and Airbus corporate jets reside. So what I'm going to do is we're going to continue the theme that we talked about in Miami, and I'm going to hand it over to Drew Gough, our marketing expert, and he's going to walk through a presentation that I hope you find very, very interesting. So thank you.
Thanks, Jeff. This thing's on. So again, apologies if you were in Miami. Some of this is going to be a repeat, but some of the feedback from the Miami conference was, hey, a lot of this information is new, and being that this audience, there's not too much overlap between London and Miami, figured we're going to go through some of the same material. So I'm going to talk about why customers choose to purchase a business airliner instead of, say, a traditional business jet. What are the types of customers that make this decision? A somewhat new dynamic that's been going on in the pre-owned marketplace as business airliners have aged. We now have 18, 20-year-old BBJs out in the fleet, and they're selling at a different price point than a new airplane. And then lastly, I'll touch on just a little offering that BBJ has to address the needs of those potential new pre-owned BBJ customers. So first, let's draw a box around what I mean when I say business airliner. I'm talking about the product offerings from Boeing business jets and Airbus corporate jets capable of flying 5,000 plus nautical mile missions, A320-based, ACJ, 737-based BBJ. These airplanes have the highest thrust-rated engines. They have auxiliary fuel tanks. In the case of the BBJ, they have lower cabin altitude installed. When I say business jetliner, I'm not talking about a converted airliner that's accumulated, say, 30,000 cycles in airline service, has been bought, and then a VIP interior installed in the airplane. When we talk about those new build business jetliners, they really are the high end of the business jet market. When we at BBJ talk about the high-end business jet fleet, it's about 2,000 airplanes and encompasses sort of the largest, most capable offerings from traditional business jet manufacturers, Gulfstream with the G550, G650, Falcon with the 7X, Bombardier with the XRS/Global 6000, and then you have the ACJ and BBJ products. So of that 2,000 some odd airplane fleet, you combine ACJ and BBJ together, we make up about 14% of the high-end business jet market. As far as where customers are that are purchasing these airplanes, the chart on the far left is wealth spread throughout the world. So where are the billionaires living? Then you see the next bar is where the BBJ fleet is located. And while business airliners are often thought of as, say, Middle East only airplanes, there's actually a pretty good relationship between, okay, billionaires, 30% are in North America, 30% of the BBJ fleet is in North America. Similarly, with Asia Pacific, there's a pretty good one-to-one relationship between percentage of the world's billionaires and percentage of the fleet. Yes, the Middle East is, I'll call it, overrepresented in this chart, but then if you look at the other manufacturers' airplanes, your Globals, your Gulfstreams, your Falcons, they too have their regions that are overrepresented, whether that be North America or Europe in the case of Falcon. So pretty even demand for business airliners around the world. I'm just sharing BBJ statistics because that's sort of the information that we're most comfortable with. I'll let our friends at Airbus share their data maybe after the conference over drinks. But when we look at the type of customer that buys our airplanes, 50% of our buyers are high net worth individuals. A little over a third are governments, and the remainder are charter operators and corporations. If you compare the 1/3 number to, say, traditional business jet manufacturers, I think we are a little higher, being that there are so many head of state airplanes that are bizliners. And then from that breakout between private individuals and corporate operators, sometimes it's tough to draw the line between, okay, the person owns a business, but they bought their airplane with private funds. So that corporate slice of the pie could probably be a little larger. So that's who buys these airplanes. Now, why do they buy them? Not surprisingly, the number one reason is cabin size, or really the features that are enabled by having a bigger cabin. Up top is the largest in production traditional business jet, largest certified traditional business jet, and then below is to scale the BBJ fuselage. No surprise it's larger. It's about 816 square feet, 76 some odd square meters, or about 2.5 times the size. It's not just the extra length, but it's actually cabin width that buys you the type of unique features that business airliner customers want to put in their airplanes. You can stretch a traditional business jet fuselage really as long as you'd like. You're still not going to be able to fit this inside the aircraft. Permanent queen-size bed is pretty standard on privately owned BBJs and a lot of government airplanes as well. Another feature that we've seen sort of increasing demand for over the last couple years is lay-flat seating aboard airplanes. And that's really coming from the airline world. If you fly international, long-haul, business class on pretty much any airline, you're in a pod seat. If you're on first class on a long-haul airline, you may have a private room or rooms, access to shower facilities. And so when you think about what customers are expecting on board a business aircraft, sure, the principal's in the back in the queen-size bed, but if you're a business associate or guest or staff, you could be spending 12, 13, or 14 hours as dining chair number 4 or middle divan seat number 2. And the appetite for doing so is getting less and less as the product offerings from commercial airlines continue to get better and better. So lay flat seating, something that folks have installed on our airplanes with increasing frequency over the last number of years, and really something you can only install in any significant number on a business airliner size platform. So you have all this space on the main deck, and you also have configurable space in the cargo area. One of the things that make a business airliner unique is that you can choose how much space you want for cargo versus how far you want to fly. We end up taking some amount of the cargo space and using that for the auxiliary fuel tanks. The maximum number of auxiliary fuel tanks you can put on a BBJ size airplane is 9, and that's what gets you out to roughly a 6,200 nautical mile mission with 8 passengers aboard. Now, interestingly, the most common configuration for BBJs is 7 tanks, and then 85% of our airplanes or our customers choose to install 7 tanks or fewer. So they've looked at their mission set, they've looked at where they want to fly and the sorts of things they want to take with them. They choose to install something fewer than 9 tanks. Just as comparison, there's a traditional business jet of 5.5 cubic meters, 7 tank. BBJ has more cargo space than that, and then you're trading cargo space for range as you move up and to the left in the chart. So that's why customers choose to purchase these airplanes new, and there's also a pretty robust pre-owned market for BBJs. This is not a market that we at Boeing Business Jets play in. We don't buy or sell airplanes, but we do track the market. And this is the list of airplanes currently for sale. We break the list up into 2 categories: aircraft that are 10 years old or newer. That's sort of the upper end of the pre-owned market. And then aircraft that are 11 years old or older. And this 11 years old and older part of the market is sort of where this new dynamic is happening, as you have these 11 to sometimes 20-year-old BBJs. The price point for these airplanes is somewhere between $20 and $40 million. So that's a different buyer versus someone that's buying a new aircraft, whether it be from Boeing or Airbus. A new current generation BBJ list price without an interior is in the low $60 million range. You put an interior in the airplane, you're looking at an $80 to $95 million proposition. Well, that's a $1 billion plus high net worth individual that's looking at that sort of airplane versus a $20 to $40 million pre-owned BBJ, a potentially different customer set. You put these 2 lists together, you get 9 airplanes that are currently for sale. That compares favorably to our inventory levels, say back in 2Q 2013, where 17 BBJs were on the market. It's tough to draw sort of conclusions from, hey, 2 quarters ago, 11 BBJs were on the market, now it's 9, what's going on? It is true, the fleet numbers are small, but I think it is safe to say that inventory levels are low. about 6.5% or 6-ish% of the fleet, of the active fleet is currently for sale, which compares favorably to traditional business jets. Going forward, we expect to see inventory levels remain low, and then residual values keep relatively steady. There's been a lot of talk of residual values and depreciation. The reason we think inventory and values are gonna remain steady is there's really a lack of availability of new airplanes from the manufacturers. From a BBJ perspective, we have one current generation Boeing business jet position left, and then we're on fully transitioned to the BBJ Max product. BBJ Max, 7,000 nautical miles of range, more space, lower operating costs, all those good things, but that aircraft sold out until 2022. So first available position is 2022. That's a green airplane. Then you got to go take it to a completion center. That's 2023 by the time you're operating the aircraft. And so for a customer that wants to enter the business airliner space, they're going to have to come to the pre-owned market to do it. Or even if they've bought a new airplane from one of the manufacturers, if they want interim lift, they're going to have to come to the pre-owned market. So speaking about residual values, this information is about a year old, but I think the message is still there, and frankly, the asking prices of this particular aircraft has come down even since then. But this is an ad I got in my email for a 2007 Global XRS at an asking price of $16.7 million. And at the time, I went on controller.com and I found that exact airplane, as well as two other 07, 08 Globals that were for sale, and I averaged the asking price of those three airplanes. And I got an average Global XRS asking price at the time of $16 million. I then went to my pre-owned BBJ transactions database. These are airplanes that have actually sold in the pre-owned marketplace, and I found 5 BBJs, all of the same vintage, and I averaged the asking price of those 5 BBJs, or excuse me, the transaction price, and I got an average transaction price of $26 million. So we got asking prices of Globals on the left, transaction prices of BBJs on the right, and what's interesting about these two groups of airplanes is that their list price when new was the same. So what's going on? Well, the Globals were new airplanes in 2007, whereas the BBJs were new airplanes in 1999. And I've included an allowance for the interior in the BBJ list price. So we're talking completed airplane to completed airplane. So from a depreciation perspective, over 10 years, the Globals depreciated at an average rate of 9%, whereas over 18 years, the BBJs depreciated at just 3%. So what do we point to? Why do the BBJs have lower depreciation rates? Why do bizliners in general have lower depreciation rates? Really, it comes down to one of the reasons it comes down to is maintenance costs, and how maintenance costs for business airliners don't escalate at the rate that traditional business jets do. Good example of this would be engines. We were just talking about engines. CFM56 engine, on wing time, 30,000 hours on average. Typical BBJ operator flies 450 hours a year, so that's 66 years before the engine's going in for an off-wing major maintenance event. That's just one example, but this manifests sort of at the airplane level in something called the ETP ratio, or exposure to price ratio. Asset Insight puts this data together. It was in the AvBuyer October 2017 article. And it's listing really, okay, what are the top 5 airplanes that have the lowest ETP ratio? BBJ comes in third on the list, but what's interesting is that you look at first delivery of the BBJ in comparison to the other airplanes, and it's significantly older. Now, if we were to look at a peer airplane, and by peer aircraft I mean one that was first delivered somewhere in the 1998 timeframe, say a G5, its ETP ratio is nearly 6 times higher. So we've been talking about, wouldn't it be great if you could get a pre-owned BBJ at a good price? They don't experience these maintenance costs. Business airliners potentially have more cabin features. Well, here's a customer that did just that. They went out and they bought the 6th BBJ to roll out of the production line, Boeing tab number YG006. At the time, the customer that bought the aircraft from us took it to Jet Aviation, put in the interior of their dreams, which included a lot of wood inlay, a sky painted on the ceiling. There's clouds on the ceiling. There's actually some geese flying across the ceiling. You may or may not be able to see that. And I think it's safe to say that this interior hasn't aged very well. It doesn't represent sort of the zenith of VIP aircraft design. But the customer, the pre-owned customer, bought it nonetheless. They got a good price on it because it was an old airplane, green delivery 1998. They took it back to Jet Aviation, spent less than $9 million on a cabin retrofit, fewer than 6 months of downtime, and they turned that airplane into this airplane. So this is a 9-tank BBJ. It's capable of that 6,000 plus nautical mile mission. They installed lower cabin altitude on the aircraft, and they didn't have to wait. They're not waiting until 2022 or 2023 for the airplane. So our mission, sort of in the short term at BBJ, is to get this to happen more often, to get customers to pick up these older airplanes as a potential alternative to a traditional business jet. And to do so, we've launched something called the BBJ All Access Pass. And really what it is trying to address the pain points of what makes someone not want to purchase a business jetliner. Are they scared of operating it? Are they scared of having to deal with the Boeing company? And so we've put in about a $500,000 roughly purchasable package that includes things like pilot training, get your pilot 737 type rated, data and documents update, AOG support, whether that's access to our hotline or answer to more technical questions from our engineering team. And then the big ticket item being the intellectual property waiver. So actually, if you buy a pre-owned BBJ or if you buy a pre-owned Boeing airplane and take it to a completion center, the completion center does work on the aircraft that requires Boeing intellectual property. There's a pass-through fee that ultimately goes to the Boeing company for that work. Customer like the one that took their airplane to Jet Aviation, they could have potentially paid the whole cost of the All Access Pass with just that intellectual property waiver or the savings they could have gotten on that intellectual property waiver. So not a product that's going to keep our doors open, not something we're going to make a bunch of money on, but something we are introducing to try to address the needs of whether it's a broker, pre-owned aircraft seller, or the buyer when they're potentially looking at a business airliner. So that's all I have. That's the presentation. Alistair, if there are any questions, or I'll get off the stage. I'll get off the stage.